Yo, yo, yo. Heal. Old habits. Ruby, how's it going? It's been a minute. It's been a minute, man. All right, got the good old chat up here, man. Let's get the ticker up as well. All right, we got Amy up here. Yeah, it's been a while, guys. Haven't been live in a little bit. Just want to talk about the cycle. Kind of talk about the markets here. What I see moving forward. With AMC, the endless possibilities. If you guys have questions, you can drop it in the chat. I'll get to those as well. And yeah, man, we're here to chill, bro. We're here to do it all. All right. Okay, so if you guys saw the video I posted last night, um, it pretty much covers the or on Sunday. It pretty much covers the update here on the AMC cycle, and I do wanna go over that first just to clarify some things. I have had a few questions on Twitter. I like to address these on either live streams or videos, um, just just to clarify things a little bit. But I think there could be mis things could be misinterpreted online, especially social media. So you guys know the drill. For those that have been around, this is how I do it, just to really clarify on these speculations and just questions that people have. But so the cycle, the traditional cycle that we have been tracking since May of 2021, that's where we take this cycle, this 62-day cycle. We take it from May 13th, but it does run all the way back into November, because we start off with uh, a major starting point here, volatility that occurred, and we had not seen that before on AMC's entire chart. That was the first time that we really saw volatility kick in with AMC and really meme stocks. Okay, so the previous cycle, this is the previous cycle. You can see it runs all the way through. Now, my theory here, I mean, this is all speculation, right? But my theory is that after the split, so post split, right, we had a reset in the cycle. And this is just a theory based on the way that charts behave when the chart is adjusted, right, based on these splits. So just think of charts being extremely diluted, and then on top of that we have basically a new chart that is formed after that. While the price fell down basically 1,000%, you flip it, you guys know that this is an inverse squeeze. It's obviously going to affect the way that that we track the cycle moving forward. This right here really just broke the cycle, right? We have a unexpected volatility zone that took place outside of where we normally experience it, but we know that the algorithm shut it back down, came back in cycle, and then we saw the inverse POI take place right here. See, on the POI. So that is really what broke this cycle here. And coming to it, if you start tracking the POIs here, we see another one, right, fall back out of the cycle. And this is the one that pretty much started everything here in what we have right now, which is the news cycle. And this new cycle is telling us the same thing, right? That from the starting point over here, we roll back 62 days, and then we start tracking the cyclical movement, right? Right now we have, we are in a POI. I'm getting more information as things start developing here. We don't have any volatility yet. The price is still trading sideways. So we're expecting to have either a break up here or another sideways trading POI, which this would be the second one, right, guys? This is a lot of stagnant pressure we haven't seen on AMC in a very, very long time. And one of the things that I covered on the video was the fast Fourier transform, which I'll get to here in a bit. But the fast Fourier transform will tell us that will show us these cyclical cycles here, and then we'll be able to understand a little bit better what's going on inside the cycle. We have not seen stagnant pressure on AMC pretty much since November of 2020, and that's what's crucial. That's what makes this POI here significant. Okay. So with the 13-day window, there is still a little bit of room afterwards for the price to start climbing back up. Another way that I see it, right, is depending on where the starting point here of this POI is. If we track it from the first inverse POI here, where everything starts falling back down, if this is the starting point and things are tracking every 60 days, every 62 days, then that would give us a POI here, right, in September. But this can definitely roll in after this major quad witching date. And if the price starts to climb up early next week, and we'll know why, because AMC has not been the best at experiencing any volatility during major quad witching dates. I mean, we've seen that time and time again. These guys wait till afterwards to release that volume, which could very well take place here going into the end of the week. All right. I hope this clarifies some things. For those that don't know about the cycle, I highly recommend you go watch some of the earlier videos. There's about 10, and those really go in, explaining what the cycle is, what the theory is. All is, speculation at the end of the day. There's just high correlation with this theory, but I think it's a very good one. And as always, guys, remember, this is not financial advice. This is just my perspective and my view here on the AMC chart and the memes and just the stock market in general, the way it functions. It's a different approach. And yeah, man, I'm just here providing my analysis with that. Okay. So now to the fast Fourier transform. I do want to talk about this. The parameters here should be at 120. Nope. Something's wrong here. Should be at 60 then. It's 120 or 60, man. What is going on here? This days doesn't really matter. Okay, so the parameter that I used was either 60 or 120. I'm not sure why it's looking different. I'm on the daily spike. And by the way, guys, the way that this works, we have an ROC length. I put the rate of change, so the changes indicator, for those that are familiar with it, that is implemented in the fast Fourier transform, specifically with stocks like AMC that have splits or reverse splits. Well, really reverse splits, not splits. Reverse splits are going to change the way a chart looks. It's not going to be, and it does not look like a natural chart at all. Everything that's happening inside right here, if I did not have this implemented on the fast Fourier transform, you wouldn't really be able to tell what's going on, post split. And that's the reason for it. But let me try and figure out here why this is doing that. And then when we change the length here, now instead of looking at 60 days, we're looking at 120, which is what we originally were tracking, right? We were tracking the POI here 120 days. So every 120 day in length here, it's going to analyze that bit of data and then smooth it out for us so we can clearly see what's going on. And yeah, every single parameter that we use here, if you change it, you're still going to see very similar qualities. I can change this to 250, right? We can change it to 250 over here, and it's still going to show us very similar qualities. You're not going to clearly see the spring on every single one, just because now we're taking in way more data, and it's trying to smooth all that out as well. So that's why we use smaller parameters for this. So like 60 would be ideal. Okay, now we're going to take everything else out here because it's kind of screwing with things a little bit. All right. Go back to 120. All right, so now I'm using a smaller, when we use smaller numbers here for the low pass filter, you're not going to see as many spikes because every time it's going through it, instead of looking at every single data point, it's going to average it out at every second data point here. So think of it as like an SMA or something. It's really just the more you have, the more data points you're going to get off of the 120. And then it's just going to look wonky, right? If you do like 40 or something, right? Like you can see how wonky that looks. Doesn't look great. So we use a low digit number for the low pass. And then the high pass, I always just stick with basically the highest. Whatever the ROC or the FFT length is, I use the same for that as well. All right. Now, with this is just a good way to, and this was the way I found the cycle to start with. It's what gave us the cycle length. It's what gave us the cycle, just the way that the cycle functions with the AMC chart. This POI theory here, the 120-day theory, has been really good. And we saw the spring qualities. Like I said, I'm not sure why. To be honest, I'm not sure why we're not getting the same spike and then spring result here. I don't know if I had it set to something else, but it was at 120. I'm on the daily here. I don't understand. Was I on like the 4 hour or something? It shouldn't really matter. Yeah, this is super weird, dude. Okay, you can see it a little bit better here though, right? We have 120 days, here's the spike, and then here's the spring, and then same thing over here, we have the spike, and then we have the spring, right? spike, spring. Now, some of them don't have, and this is what makes this one significant here, is that the POIs that we've had in the past, they don't have positive POIs prior to, well, that we have a breather cycle, and then we have another positive POI, which is the same thing we have here. We have a breather cycle, and then hopefully this is a positive POI, giving it until the end of September for that to get a little bit more data. Because the starting point of this POI is going to determine what the starting point is for the post-split cycle, right? This is what's going to determine that. And it could be, right, that this POI here starts a little bit later, right? And then it's the same thing. You fall back in this 13-day window, and that starting point changes as well. Everything is shifted slightly to the right. This is why this specific cycle has been a little bit harder to track, is because we don't have enough data. If everything resets right here, it kind of makes sense, right? You reset the option chain, which is huge for leverage, and just the way that AMC moves. But when you reset that, it's like you're resetting the entire chart. I mean, it's a very, very sticky thing with just markets, right? Now, that's what we're waiting for here. That's what's going to give us the starting point. That's what I've been waiting for. Apart from that, guys, this is all stuff that we've been talking about for quite some time, and you guys understand the nature of AMC, and this is why, I come in, I post when I think it's relevant and I think it's important, because everything inside the cycle here, we experience what is this theta crush, right? The parallel channel that is a market maker's favorite pattern, pretty much for stocks that have extreme volatility, is a theta channel, right? Because here what they're able to do is just collect premiums every time they experience volatility, right? A bunch of people buy options, they shut it back down, and they bring it to a range right now, which is $5. They've been just collecting premiums with that $5 range and making all that money until it breaks out, and they're waiting for that, collecting all this cash here to then bring it back up to a next comfortable range, and then kind of repeat the process. But as long as we're trailing on a positive trajectory here, a bullish one, that's going to change things here for AMC in the long term. But yeah, I mean, we know that is how this AMC cycle runs. It's nothing new. I think this is one of those plays that I think many people have been extremely patient with it, waiting for the chart to finally turn around. We have patterns that we've been tracking for a while that all have the same qualities in structure here from the starting point here of this phase. All the patterns, guys, these are macro patterns, right, that all have the same starting point. They all fall the same way, and then they all come up to a range here. We can call this a point of control. If you're taking a look at volume analysis, point of control would be somewhere in this range right here. Anywhere between 40 and 80 would be a point of control if you take a look at volume analysis. And I think stocks eventually, especially the ones with decent and good fundamentals, unless they're going bankrupt, they do come back to that point of control range. It's just a matter of when. And putting the cycle aside, guys, I mean, technicals do matter at the end of the day. It's the way that these institutions use that to their advantage, and psychology plays into it a lot. But yeah, here's a couple of stocks that have done this before. It's just you guys know we take a look at these stocks for reference, and then use them for levels, right? But all these fell, man. All these fell the same way. We have OCGN, Tilray, VXRT, Sava is one of the better ones that I'm tracking. We have TEL, and then NVAX. NVAX as well is one of my favorite ones. Between NVAX and Sava, I think both of these, tell a pretty good story here on the AMC chart. All right, another thing I pulled up were these quad witching candles. All right, quad witching candles showing us basically the close of either a positive or negative quad witching date. And we've only had in the, starting September of 2020, we've only had 2 candles in a row, right, turn green. Only 2, guys, and this would be the first time if AMC closes above, which right now we're not there, but if it closes above 550, right, that would be the first time in almost 3 years, right, that AMC closes green, right? It would be the first time, which is huge. You take a look at the SMA, the 200-day SMA. It's also crossed already to the upside. It's another positive indicator. And then, this kind of sets us up here to finally start to shift this trajectory. We have the quad witching curve, right? The quad witching curve is very important as well. It's basically the same thing here. You take the candles and you'll be able to see that. This would be the second positive, very, very, very faint, nothing crazy, but it's still showing us that the trajectory would be changing. I personally would like to see it come up to $6, but regardless of where it goes from here, if it's still showing positive pressure, the curve is changing. That's still positive news. It's slow, right? It's slow. That's the problem. But it's still positive, right? Man, this is one hell of a chart. All right, let's see. See some of these questions, man. When next POI? Those are the basically most of the questions I can see here. But we are currently in a POI, and like I said, the post split, we're still trying to gain enough information here to understand how and where the starting point of these POIs are. Because this works on a cyclical level, and I'll show you guys an example here of why this is crucial. And this was not a problem, pre-split. This was only a problem. Basically, we can go back to August 2022. That's really where, that's where they introduced the APE, the preferred shares and all that. That's pretty much what ruined everything, but I would say even more post-split and then, converting back, combining the shares again. Everything from August to in a year kind of ruined things, and then even more post-split. But the cycle here ran on a 62-day basis, right? We have it like this. From the 13th to the 15th of July. Okay, that's 62 days. And then from here, we could clearly tell the 13-day window was positive once, twice, and then 3 times right here. All of them inside the 13-day window. And we also saw this happen inverse. Right here, right here. Okay? So the consistency here was great. And this goes back, guys, to November of 2020. That's how crazy this thing is, right? But when you start to shifting when you start to shift the cycle, right, very slightly, if you don't know the starting point, this could have started, you know, June 3rd, right? And you can see how that already starts to shift things a little bit. The POIs could be a little bit earlier or they could be a little bit late, but it's not perfect like we had it before. The way we had it before, it was definitely tracking, and basically these were so much easier to predict when we were going to experience these massive pumps or these massive drops. But right now, you go back, you leave the same cycle there, and things are definitely not tracking after the split. And this is why it's important to understand the starting point, because, yeah, the starting point could be July 24th, right? Or it could be August 24th, which is a month later. It could even be after this entire volume had already been distributed. It could be right here, September 12th. So we're talking like 2 months of the unknown, right? Of the unknown. And anywhere that you shift it, if this falls in between that 13-day window, which it could be 13 days early, 13 days later, I mean, it's going to shift things drastically. And this is why there's no set point here on where the cycle is, where the cycle starts or where it ends. And this is why this next POI here is crucial. It's going to tell us that. And it's going to tell us that if it's a positive or inverse POI. If it's flat, it's not going to tell us that. Right? If it's flat, then we can still speculate on, give a good average on where the next POI would be. But if that was the case, in my opinion, I would narrow it down to be anywhere between November and December time. Right? November and December time would be later November, maybe, early December time would be the next POI if things remain flat here. Otherwise, I would expect things to happen either this week or next week going into the end of September. Okay, so we'll kind of come back to Amy here, but I do want to cover some other things, guys. SPY is and broke all-time highs. I want to talk about this because this matters a lot, with AMC and going with the AMC cycle. But everything that's happening right now is extremely similar to this time over here, November 2020. Dude, so much is just happening the same way. We have the same fake outs, the same structure, everything. AMC was trading at all-time lows in this range. I mean, the same thing. And you look at the market. We'll use the fast Fourier transform here as well. We've done that here using the all-in-one indicator, and it shows us the same thing. The all-in-one indicator shows us the same structure, the same average of all of these stocks, and we fall back to that time window back in November of 2020. Here's the structure that I'm referring to, where it goes up, kind of creates a little arc setup with a spring, 2 springs, and then boom, it starts climbing back up into January of 2021. This setup right here is and has extremely similar, a very similar pattern structure that we saw over here. Now things started to stray away a little bit, but the levels are still tracking, guys, and that's what's important here, is that we haven't crossed this negative 10 range, which is something we didn't see back here either. And things just started to climb back up. Remember, the algorithm is able to distribute volume anywhere in the sequence at its own rate, at its own speed, however it wants to. It's the levels that we track, ultimately that's what's going to be important here. If we see the pattern structure developing, the levels are going to be the more important thing to track after that. When you start triggering these major level points, that's when we start to sort of see the inverse nature of these POIs. But we don't, we have not seen that here in the markets, and I don't see that happening. I mean, we're trading at all-time highs again. What I do see happening is the market's trading up here for quite some time. I think that we're going to break and remain in this, 550 to 600 range for a while. I mean, we could potentially be trading up here for about a year. I mean, look at what happened in December, December of 2021 going into October, right? Everybody thought the market was going to crash, and it's just very, choppy and a lot of volatility taking place. I see the same thing happening here, but inverse. I think we're going to be choppy, back and forth. You're going to see a lot of volatility. What does that mean? That means that you're going to see a lot of these stocks that have been beat, similar to what we saw in 2020, are going to start climbing back up, preparing for a large market and slow potentially, but essentially what I see happening is a correction that's going to take some time. I don't see things just crashing or anything like that. I see things slowly distributing for a while, potentially twice as big as what we saw in 2021 to 2022. It could take 3-4 years for the markets to do this. And yeah, man, you're going to see probably crypto and, meme stocks, everything pump because they need so much liquidity to be able to do something like this. And yeah, these are just projections I have. Again, looking at pattern structures and cycles and just the nature of how they use these instruments, right? Specifically with AMC and crypto, how they use it to leverage the markets. Another thing, guys, which is absolutely crazy, is at the weekly chart here. This is a weekly chart on SPY, okay? You guys remember CopyPat, okay? CopyPat, I don't even know if I still have this or not, but CopyPat is one of the one of the indicators that I provide, and we used this back in October of 2022, and it was correct, man, that it not only triggered the levels but the timing. It said that the markets were going to come up to 550 by around this time, which is absolutely crazy. And the fact that this is playing over, you could see the CopyPat projection actually had it doing something like this. And up to that point, it's been correct. So, this is the weekly chart here. Again, I wouldn't see things coming down until probably mid-2026. I do think that we're going to be trading up here for a little while. So again, I think this is very good for AMC. This is very good for crypto. All the meme stocks, I mean, they do best, man, when the markets are just kind of choppy, when they're just trading sideways. Or, slightly going up on a curve and then, experiencing volatility, just like 2022. Oh, man, where is... Yeah, there's a few stocks right now. Let's take a look at the all-in-one indicator here. Let's see what we got going on. Looks like Sava has some volatility taking place. Oh, you guys can't see the entire chart for some reason. Okay, so this right here is Sava. It's showing us intraday. All-in-one indicator just shows us intraday movement of a set list of stocks. It's quite an old indicator that we've used. So yeah, let's see what's going on there. Sava. Why is Sava having intraday volume here? Probably a catalyst or something. Important catalyst. Sometimes, man, stocks just start pumping for no reason, right? Like AMC and GameStop. They just kind of start pumping for no reason. All this good stuff, bro. Daily chart. Let's take a look at what we got here. It's still at, I'm not sure how far this would go. I think if you go to a week, you start to get kind of choppy. Here's the weekly. Absolutely insane. The weekly chart here of basically all these stocks up to 1994. To 1994. Tesla right here, 2014. This is Plug. You guys remember when Plug was like at $1 in like 2019, and then boom, it just like shot up like crazy, bro. Here's AMC, good old AMC in 2021. All these stocks, man. And then you guys can already see this, right? I mean, you see how they distribute so they pump everything, they dump it back down, and then we're in a stage of accumulation again. I mean, you go back to 2014. Now, I don't have every stock. I have about 100 stocks in here. So back over here, there was probably another set list of stocks that were pumping, right? We just don't see them on the chart here. The same thing. They pump them like crazy, and then you go through an accumulation period. And then after that accumulation period's done, happens again, everything pumps again. And it's pretty much just that's the cycle, right? Of they're gonna rinse and repeat. But yeah, man. We also ran the scanner. The scanner is huge with all this, man. Platzi is an awesome tool. All right, let's do something else. I want to go over pretty much all the fractals that I have here. I haven't talked about the fractals much. I think that it's important to look at the fractals because they, believe it or not, the most accurate pattern on AMC's entire chart was a fractal, and it wasn't even it was a fractal off of, you guys remember, the ARPA premium chart, not even ARPA's actual chart. This is the premium chart. So similar to options in the market, cryptocurrencies have premium with leverage and margin, and also futures and all that good stuff, man, goes into this, the way that this premium chart is developed. But the craziest thing is that this chart basically also told us that after AMC's conversion, it was going to basically stop tracking at that point. I mean, this chart right here gave us enough information. And yeah, the gap developed after the ape conversion right here. Everything up to this point pretty much stops tracking. And with fractals, man, like, this is crazy. It's crazy that not even, one-to-one pattern would be more accurate to track. I mean, don't get me wrong, one-to-one patterns are great at telling us where we're more likely to experience volatility, but fractals, I mean, if you get this was, I believe, on this entire section here, I think lasted maybe a day on the ARPA chart, and it basically has, not only the levels are tracking, the POIs are tracking on this as well, the volatility zones are tracking, and to think that all this happened in literally a day or two with ARPA on that time frame is absolutely insane. But yeah, with this is a fractal. So we have a lot. I mean, I have probably 20 in here, and I still go over these because I think they're relevant as far as the levels go, man. I think more than anything, the levels are important. So most of these patterns, they do have a good bit of historical data, but what they all have in common is the volatility zone at the beginning, which is what starts the cycle and the phase, right? And they all have extremely similar pattern structures in the middle as well. This is a accumulation phase on AMC. If we split it up a little bit, this is what we get. So we have our projector. We have the volatility zone, like that green. And then we have this massive, and this is, one sequence right here. Pretty much this is the tough part right here, because this entire section here, with the volume as well, we could use volume analysis for this, but it's the way these guys are able to keep what's happening inside and so flat for so long. They're using time against the retail or institution that is betting on AMC going up in the short term. It's clearly a pattern structure here that we've seen time and time again, especially, and I had a comment on this too, like somebody saying, oh, I think it's a Carvana sequence that we're tracking. And yeah, I do agree that I still think this is probably the best fractal to track in terms of levels, because if you take these two apart, you'll see that very quickly did AMC go up to the levels it did, right? Carvana, it took some time. It took like a month and a half for it to reach the levels that it did. But tracking the levels is very accurate on when comparing the two. I mean, the levels are extremely accurate. We have the projector, we have the volatility zone, and then it comes down, and this is where we can start to track this sort of mid phase here on AMC, which looks very similar, right? We have, it's crazy that, this section here, originally we were tracking it like over here, right? But to think that they were able to just keep it sideways for another 3 months is absolutely insane. But now it's definitely clear to me that this is kind of what we're dealing with here. It's a version of it. We're dealing with it. So again, I'll say this again, and I say this every single video. The moment that this crosses $4 is the moment, and if it stays below there for a day or two, is probably the moment that this entire set of fractal list and all the one-to-one patterns that I've been tracking are invalid, because none of them fall below that range and then climb back up quickly. I mean, the ones that do fall below would likely tell us that AMC is, you know, when you double bottom, now you kind of have to look at everything else that happened before that. And if things are going to climb back up, then it's going to take some time. You're going to have another accumulation phase take place. But none of them are calling for that right now. It's holding well. It's just time, right? Time is what is really killing us here, man. With AMC, is the timing is the crazy part. But yeah, after this, man, the one thing I will track with it, and with, you know, what all these patterns are calling for, is the $8 range going back down to $6. That is going to be the next check, regardless of whether it does it on this POI or on the next one. That is the next level I am tracking, because once it goes there, and say it stays there for a cycle or two, and then it starts triggering these major levels at 14, and now we're set to start tracking the next sequence. And I'll give you an example of this. There's a stock that I tracked recently, and I tracked it for quite some time. I just kind of, this was a test example sort of for me, but Clover Health, this stock right here, I was tracking a pattern. I have a few patterns that I've been tracking, but I also tracked the Carvana sequence here. And look at this. Again, doing it in its own time. I tracked this since it fell down to 60 cents. Okay? And this entire section did it in its own speed. Right? Okay, the lows were hit, the highs were hit. Everything that happened right here was sped up on the Clover chart. Okay, but every single time from the low hit every single level. Right, to this point, down and climbing back up. Basically, this is telling me that Clover is gonna trade in this range for a little bit and then double top or something, and then start kind of falling back down, similar to what Carvana did. I mean, maybe even see 175 again going into next year, right? Now focusing on Theta, right? Because they had a massive push to the upside, and now it's kind of waiting to break back down. But yeah, just a prime example of that, guys. Some stocks are going to do it a little bit quicker. Some stocks are going to do it a little bit slower. This is what we take a look at when it comes to time on AMC. Things are just very slow right now. And the nature of the stock matters too. AMC is a stock that has many, many eyes. And sometimes things just happen very quickly, just out of nowhere, right? But the way we've seen it with with other stocks is good to consider, take note from, understanding how these cycles work. So Carvana is the other one. This is another one we track. JAG X. Okay. This is another one I really like. This one is BNX. It has a lot of historical data. Okay. This one looks like the Bitcoin. Man, even Bitcoin looks like AMC right here. I think I have Bitcoin. Here's another one that looks great. I think this is, it has this dead cat over here. I think most of them have the dead cat. distribution with a spring, accumulation, pump. Most of them have that. This is another one. This one's a little bit slower, but it gets the job done. And if we overlay them all, guys, they're all going to come back down to that 8. That's the mid-range here for the next move to 14. It's going to be $8. Another one here with the dead cat. More historical data. ARPA. Here we got NVAX. This is NVAX's macro chart, and this one is going to give us basically all the levels. The only thing that's not the same here is the timing as much. But if we try and line them up into like the closest POI from the top here. Okay, we have 1 level hits, 2. This right here is the most important part because it's the distribution that took place before the split, which happens very similarly on the NVAX. And the NVAX pattern also has the dead cat. You can see it right here. This is very small. And then VXRT. And these are the fractals, guys. A few of them they become one-to-one patterns after the split. But if they're on the fractal list, if time is manipulated in any form of way, that's what they become. All right, we got some more questions. Any catalyst? Look, man, I have my suspicions. I don't want to get too, and this is just like my perspective, right, on what I think the catalyst would be. I'm not sure. I can't tell you for sure what like this is all speculation, and it's like I don't know. This would be a dream or something, right? But my whole thing is, I mean, you got to go back and look at the catalysts that happened around the same time and kind of formulate with the current market conditions, because all catalysts have to make sense with the current market conditions, right? So back here in November, we had movie theaters open back up after COVID, right? So COVID happens, and then blah blah choppy chop. And then you saw like mRNA here pump, and Pfizer, everything starts pumping like crazy. And then, yeah, AMC pumps, makes one final double bottom, and then the market squeeze. So that's what we're waiting for here. We're waiting for that, like what that catalyst is going to be to make that projector pattern. I think it would be, and again, this is just speculation. I don't know what's going to happen, man, but it would be crazy if maybe if there was like a buyout or something. You never know. You never know with these kinds of things, but there's a lot that can happen. There's a lot of rumors that can be out there, but if a major company were to kind of step in, that could potentially make the price go up like crazy. Think about it. AMC has the largest supply when it comes to actual theaters in America here, and if somebody were to utilize this supply in some form of way, maybe a bigger company, won't say what or who I think, but that would be a pretty insane thing. I mean, I just don't see movie theaters. Think about it. It's just people really just want to stay home, and I mean, it's the whole experience factor that comes with that, and we've seen time and time again. I think COVID showed us that a little bit. Sure, things died down a little bit in COVID, but there's no reason people would just stop for for the. I mean, just think about it. It's a big movie theaters, bro. Could you really just see that going away for good? I mean, it's all about the way people talk about these things. Think of it like Netflix or yeah, probably Netflix or something. If they were to team up and buy out, AMC or make some kind of deal, man, and then you, I mean, just think about that. That would be absolutely insane. A buyout takes care of all the unknown from there. I mean, you got the biggest. You kind of like. It's crazy how it works, man. But you start with cable, then all these streaming services come into play. It's all spread out again, and then they kind of want to merge everything back together again. You have multiple applications that are doing that. So I think this is kind of the same thing. There's always a catalyst involved, and it's a monopoly, right? At the end of the day, if these companies can make money off of that and utilize the supply, I think, well, it's going to benefit both parties. So I don't see movie theaters ever going away. That's just my opinion. And I think that if somebody takes advantage of that, if they use, potentially AMC for that, could benefit with that company. And then also, if something like that were to happen, I mean, dude, the price would go ballistic. So I don't know, man. I don't know what the catalyst was going to be. I don't know if that's going to be the catalyst. I mean, again, all speculation. But if that were to happen, whew. Hmm. How do I think that they're able to keep it flat, man? It's the pump and dump. It's how fast they sell these premiums, and then um, they're able to use. In my opinion, they're able to use that capital, and it's not just the market maker, but you have to think of it as the bigger guy or the one with more money, and doesn't even have to be a market maker. It could be an institution that is able to sell these contracts at high premiums because people are going to buy them. And then think of what that does to the drastic ratio between what high premiums are at the time in which where volatility takes place, and then, for example, now, right, where volatility is not really a thing. For contracts, say, that expire the same week or even a week, uh, we're dealing here with contracts that are either monthlies or weeklies, that are extremely important, because you can see in the option chain, you look at the furthest out of the money contract, right? Could be trading at pennies. But when volatility takes place on a stock like AMC, because it has so much backup or backing here in the retail community, these guys take advantage of that. So every time they're pumping and dumping, they're just collecting all this cash. And then from there, they're able to naturally suppress it. Now, this is not just a thing for AMC, though. You have to think of this massive like basket, right? As Astor would say, he said this like there's this like basket of stocks, and he's right with that, man. That there is a bunch of meme stocks that are, and a bunch of just stocks in general that are used for this sort of cycle cluster of that is backed up by the majority, which is retail. And a lot of these come up and are talked about, say, in, on Wall Street bets and stuff. I mean, it's not just AMC. They're not just using AMC's liquidity. And the reason for that is AMC is, I mean, the option chain itself is not like the most valuable thing in the entire market. These are just used as hedges for other securities and other stocks in the market. So AMC pumping and dumping at the same time as GME, you got to combine those two, especially if they're in the same window, and which we believe they are. But yeah, man, they're able to do that with a lot of stocks. The big player is so one particular stock that is or experiences this unexpected volume, say like we saw back in 2023, it's not going to be the end of the world specifically for that one stock. You would need to see a mass event take place in the markets where something is not happening in the cycle and it breaks. You see it happen very quickly out of nowhere. The only time we've ever seen that was in 2021 with GME. But that broke the cycle in the sense that if there was a cap that these guys had to suppress the volume, you could see it exceeded that in the after-hour session for GME, and the stock was just showing very odd and very strange pattern structures, which we don't really see in the cycle. It's very just choppy. It looks like this. Yes, it happened inside the POI because that's essentially what started it, but the things that were happening on the micro chart were just random and weird. It was just, there was no structure to it, which is something that we're not used to. So yeah, a stock becomes, and I've said this before, but it becomes more vulnerable inside the POI because if there are institutions that are dumping this volume, or these high players that are dumping this volume in the POI, and then more volume comes in, if more people know about it, and it's obviously going to make the stock have this ripple effect, right? Just keep pumping and pumping and pumping until they have, right, like institutions like Robinhood and other brokers just basically take away the buy button. So there's always, man, some catalyst that either will make or break that POI window. Yeah, Ethereum Classic back in the day was the cryptocurrency that was tracking basically right behind AMC. And AMC was the one cryptocurrency we were using up to August of 2022. Again, kind of goes with this whole theory of like that is when the cycle really stopped tracking the current movements, because everything was pretty much flat up to that point. And also this that happened here in May also proves that as well, that they use multiple securities for that reason. It's not, it's not, once a cycle starts, it has an endpoint to it, and after that endpoint, you have to rinse and repeat with other stocks, right? Especially if that other stock or cryptocurrency has a different agenda. If that different agenda is, say Ethereum Classic did not get beat the same way as AMC, obviously. It's just accumulating right now. And yeah, they have different agendas, man. So it really is spotting and understanding where these liquidity sectors are. We do sector analysis here too. I have a indicator here that shows us here how sectors move in the markets. Could pull it up for you guys. It's called sectors vortex. Pretty cool stuff, man. And I guess we'll take away the fast Fourier transform for a bit. But so I've split it up into 5 sectors. So in the meme sector, we have, I need to, for some reason, this is not, I need to shrink this or something. There we go. You guys can see everything. I don't know why I did that. Okay, so we have the meme stocks, but again, I've said that memes are not the only basket of stocks that these institutions use. You have the same thing happening in every single sector, and these sectors have, we'll call them, we have the composite man, right, controlling the big money. Inside these sectors, say in the meme sector could be used for various things. It could be used for the crypto craze. It could be used for the green rush. I mean, it could be used for the giants, the big blue chips. But the giants and the big blue chips are typically used in bulk. So everything that's happening inside these volatility sectors is for the bigger company, the bigger stock. And then you have these smaller guys, these are all split up. In the green rush, we have basically all the cannabis stocks. And you saw Tilray, CGC, all these guys that were pumping even prior to AMC. These were stocks that were used back in like 2017 along with crypto. And then you have the tech disruptors like, Carvana was in there. We had Roku. We have AI. Now these guys are considered a little bit more on the medium cap. So we saw volatility, but not to the same extent as the memes. The memes right now have the most volatility. Same with the crypto craze. We have Mara, Riot. They experienced a lot more volatility back in 2020. So every sector is unique in its own way. Speculative plays, these are going to be some of these smaller guys like DJT or maybe some of the stocks that just kind of pump based on a more shorter term, with a shorter term agenda, right? Like DJT is clearly a stock that will pump based on maybe the outcome of the presidential race or stuff like that, which we have on a shorter term, again, a shorter term agenda. Yeah, so all these, man, understanding the way they pump and dump liquidity throughout the entire market is going to even help us more narrowing down POIs all over the market. I've used this. This is a very helpful tool to use with not only understanding the AMC and the GME cycle, but understanding other cycles like what's going on in the crypto markets, what's going on with everything else. I do narrow it down. And recently, the one that we were able to spot was the tech disruptors. You can see right now it's ahead, right, kind of just tied with the memes here. Right, it is positive. The rest are kind of trading in the lower range. Okay, now the only other time we saw that was after 2021, but we did not go up the same way. Right, we have similar qualities when using this, similar qualities to what happened after the June run up, which is right here. You can see it comes up 200%, similar to what happened here. Falls back down, and then the green rush kind of trades on a lower range, and then the crypto craze and the tech disruptors are trading right above with AMC. So basically what's happening here in August 2021. Okay, it just gives you a nice section and window here to track And then you will see inside these disruptors, the tech disruptors, okay, so we have Carvana, Roku, AI, and Upstart. These guys were next on the list to go right after AMC and GameStop dumped. These were the stocks that we were tracking, and most of them started to climb back up. We had Upstart on the list, tracking Upstart, and then we have a massive push to the upside. So yeah, again, this is just sector rotation. It's something that, because stocks cannot go up together all at the same time. It doesn't make sense. There's no hedging involved, and we know that if these guys are going to be hedging, they're going to have to pump and dump stocks and pump that liquidity on over to the next sector, and so forth, right? Just keep rinsing and repeating. And all of this is the crazy part. These are used basically against each other to please the bigger guy, which is, well, now you have the blue chips, right? You can see why I don't have the blue chips in here. It wouldn't make sense to put the blue chips in here because the blue chips work completely different. They almost have their own world to trade with. Also, the blue chips don't go up together, but now you're dealing with a bigger issue, and that is the derivatives, because derivatives play a bigger role. If I were to show you the derivative charts on these bigger guys, they would look very similar to the way that AMC, GME, or any play inside the sector list here. The structure of the charts, very similar. High volatility, trade sideways. Look at the VIX, right? UVXY. Very similar qualities. Actually crazy. When I run the scanner, the pattern scanner pulls up matches, man, to the UVXY on stocks like AMC or the cannabis sector, or even some of the tech disruptors as well. And that just tells you, man, that if you're finding matches from the UVXY, which is what's tracking volatility in the markets, that should just tell you, man, like, what are they using these guys for if they're behaving the same way? Volatility, man, crazy. Well, yeah, it should be a crazy week as well in the markets. Kind of going back to it, let's see what's going on here intraday. Okay, so looks like this is Upstart. No, this is, Upstart. And this is ACR, ChargePoint. It's still Sava doing its thing. AMC's trading sideways. Yeah. Oh, another thing. We finally have options on TradingView, but we don't have option charts. So it doesn't really help, to be honest. I was hoping we got the option charts. I still think, man, that these guys are way behind on. I don't know why we don't have an option charts. Option charts would be so helpful to have. They got the premium charts and everything, man, on crypto, but they don't have option charts. Come on, get on that. Get on that, TradingView. We need those. All right, guys. That will be it, man. I went live for an hour trying to cover some, in-depth questions and stuff on Twitter and on the Discord. That's what I like to do, man, on the live stream. So if you guys like this video, give it a thumbs up. Subscribe if you guys haven't already. And I will see you guys on the next stream, man. Take care. Good to see you guys again. Love you guys, man. Bye-bye.